All right, so you want to know what makes one of history's best traders tick?
Mm-hmm.
Well, we went deep into Reminiscences of a Stock Operator to find out.
Yeah.
And let me tell you, this book, it's not just about boring financial stuff.
Right.
It's a wild ride through the early 1900s stock market full of insider stories, crazy wins,
Yeah.
brutal losses, and trading wisdom that is still relevant today.
It really is. It's amazing how the story starts with the narrator, who we later find out is Jesse Livermore,
Right.
but he's just a kid,
Yeah.
totally obsessed with numbers and the stock ticker.
It's wild.
Those kids are like, dreaming about toys, but he's memorizing price patterns
I know.
and figuring out ways to predict the market.
It's crazy. Even as a kid, he was trying to understand like the why behind price moves, not just the what's.
Exactly.
So ahead of his time.
Yeah.
So where does a kid with this kind of talent even get started? It's in these bucket shops, right?
All right.
Kind of like I don't know, the shady cousins of the real stock exchange.
Exactly. Imagine like betting parlors for
Yeah.
stock prices,
Yeah.
but no actual trading going on.
Okay.
They were designed to like take money from people.
Right.
But our narrator, he was cleaning up by the time he was 15.
No way.
Yeah, even made enough to quit his job.
I can't even imagine like a teenager outsmarting, seasoned gamblers
Right.
in a system that's like rigged against them.
That's
That's
cool.
insane. But being that good got him in trouble.
Of course.
He was literally too good for the bucket shops.
Yeah, he was winning so consistently
Really?
that they started banning him from these places.
Oh, wow.
Imagine like getting banned from a casino for winning too much.
That's crazy.
It's wild. He even resorted to like using fake names and purposely losing sometimes just to avoid suspicion.
Wow.
Yeah.
There's that story about the Cosmopolitan Stock Brokerage,
Oh, yeah.
the biggest bucket shop in New England. And they threw everything they had at him. Extra fees, higher margins,
Oh, yeah.
basically trying to make it impossible for him to win.
Right.
But he still outsmarted them.
I know. It speaks to his resilience and how adaptable he was.
Right.
This guy was constantly having to outsmart the system he was playing, even as a teenager.
Jeez.
But eventually, he decides to step up to the big leagues.
Right.
The real stock exchange.
That's where things get interesting, right? Because his bucket shop tricks, they didn't quite work in the real world.
Exactly. See, he was used to, like, instant trade execution in the bucket shops.
Right.
But on the real exchange, there's a delay between, like, placing your order and it actually being filled. So it totally threw off his system, and he started losing money.
Yeah.
Big time.
It's a good lesson there, though, right? Like, even a winning system
Yeah.
needs to adapt to new rules.
For sure.
No matter how good you are,
Yeah.
you have to be able to adjust.
To-
So to rebuild his stake after those losses, he actually went back to those bucket shops.
I did, yeah.
Kind of like going back to the minor leagues,
Makes sense, yeah.
to sharpen his skills.
If you want to get good at something, got to go where the competition's tough.
Exactly. And during this time, he has these run-ins with two bucket shop owners,
Oh, yeah.
Dolan and Teller, in St. Louis.
Right.
Now, Dolan immediately recognized him, right?
Ran away, yeah.
And refused to let him trade.
He knew. He remembered, yeah.
But Teller underestimated him,
He did, yeah.
at least at first.
At least at first. Until he realized who he was dealing with.
And even then, like, Teller still tries to pull a fast one,
Oh, yeah.
shortchanging him on a payout.
Yeah, he tried to cheat it.
And then we find out later that Teller was, like, involved in some shady stuff at the racetrack. And
Yeah.
it's kind of like poetic justice,
Totally, yeah.
This whole theme of, like, running into shady characters
Yeah,
really makes you think about, who you're doing business with,
Right.
even today.
absolutely.
And then, of course, he heads back to New York, right into the booming market of 1901.
Yeah,
Millionaires were being made left and right.
I know.
Everyone was throwing money at the market.
Great.
Sounds kind of familiar, doesn't it?
The parallels to recent markets are really striking. It's like history repeating itself.
Absolutely. And so how did he do in this wild market? He started out strong, right?
He did, yeah. But then he made a big mistake.
Mm-hmm.
He tried to short the market, betting against the boom.
What
A
happened?
huge gamble, and it backfired big time.
Ouch. It reminds me of that saying, the market can stay irrational longer than you can stay solvent.
That's exactly it.
Yeah.
Even if you think something's overvalued,
Right.
the trend can just keep going.
Yeah.
And you can get wiped out betting against it.
Yeah. But this experience, it forced him to change his thinking even further.
Yeah. It wasn't enough to just, like, read the tape anymore.
Right.
He had to understand, like, the bigger picture, what was driving the market's behavior.
Right.
Yeah.
So he started looking at underlying economic conditions, money flows, and even the psychology of other traders.
Exactly.
That's a big change.
Yeah. This was a turning point.
Okay.
He went from a pure technical trader to someone who understood, like, the deeper forces at play.
Okay. So we got our trading prodigy going from bucket shops to the stock exchange.
Yeah.
Learning hard lessons about, the real market.
Yeah.
Respecting its power.
For sure.
Where does his wild ride take him next?
Well, buckle up, because the next chapter involves one of the biggest financial crashes in history. The Panic of 1907.
Oh, man. That's got to be interesting. Can't wait to hear how he navigated that chaos.
It's a wild story, full of drama, intrigue, and some seriously smart trading moves. We'll get into all of that right after this.
So we left off with our narrator heading right into the Panic of 1907.
Yeah.
I mean, this wasn't just like a dip in the market.
Right.
This was full-blown chaos.
Yeah.
Banks were refusing loans.
It was crazy.
The stock exchange was on the verge of collapse.
Yeah.
And panic was gripping the whole country.
It was a time of, like, extreme uncertainty, a lot of fear.
Right.
And a lot of people lost their fortunes.
I'll bet.
But our narrator, even though he was, still relatively young, he saw this as an opportunity.
Really?
Yeah, he'd been getting, like, more and more bearish on the market.
Okay.
Noticing these warning signs.
Like what?
Like excessive railroad financing. The money supply was getting tight.
So he was kind of anticipating the crash.
Yeah, he was.
Wow, that's incredible.
It wasn't just luck, though. He was paying attention to, like, the fundamentals.
Yeah.
The cracks beneath the surface of that booming market.
Gotcha.
And when the panic hit, he was ready.
Okay, but how do you even make money
Yeah.
when the whole system's like falling apart?
Well, he started by shorting the market, basically betting that prices would keep falling.
Okay.
Risky move.
Yeah.
But it paid off.
Initially,
But then he made a classic mistake.
Yeah.
He got greedy
Oh, no.
and sold his positions too early. Missed out on even bigger profits.
It's like that age-old thing,
Yeah.
like wanting to lock in those profits too fast.
Exactly.
I bet that was a tough lesson.
It was, but what's even more impressive?
Okay.
What he did next.
Okay.
So as the panic was hitting its peak,
Yeah.
he recognized a potential turning point.
Really?
Banks were starting to cooperate. There was talk of a government bailout.
Mhm.
He saw an opportunity for a rebound.
So in the middle of this crash,
Yeah.
he switches gears and starts buying. Talk about like nerves of steel.
I know, right? He covered his shorts, and he even went long on certain stocks,
Wow.
betting that the market would bounce back.
Did.
And he was right. The market stabilized, and he made a fortune.
So he correctly predicted the shift.
Yeah. It's a brilliant example of market timing.
Totally.
Recognizing, like, when a trend's about to reverse.
Right.
But more importantly, it shows how he could adapt,
Right.
change his strategy, even in, like, the most chaotic situations.
Exactly.
This wasn't just luck or intuition. This was a calculated decision. He understood the market and how people react.
Yeah, it's a good reminder that the market really is driven by people.
Oh, yeah.
And emotions can be just as powerful as any
Definitely.
kind of economic indicator.
He started to see the market, like, as this living, breathing thing
Okay.
with its own moods,
Yeah.
rhythms.
Okay.
He became a student of crowd psychology, learning to anticipate how people would react to, like, news or rumors or just price movements.
So he actually used this knowledge to like manipulate the market, right?
Yeah. He was a master of manipulation.
Yeah.
But not like, spreading false info
Yeah,
or
yeah.
doing anything illegal.
Okay.
He just understood how to use his trades
Right.
to create the price movements he wanted,
Okay.
exploiting, the herd mentality of traders.
Right, like the whole follow the leader thing.
Yeah, exactly.
There's that great story about how he manipulated those Chicago grain traders
Oh, yeah.
by shorting oats,
hmm
and then that triggered a wave of selling in corn.
And then he could buy corn at a lower price.
So smart.
It was brilliant.
Yeah.
Because it shows how, like, seemingly unrelated events
Right.
can have this, like, domino effect in the market.
Ow.
He knew that traders often react, like, emotionally,
Right.
impulsively. And he used that
Yeah.
to his advantage.
But even with, like, all the psychology stuff,
He wasn't immune to making mistakes, right?
of course not.
Like that whole thing with Percy Thomas and the cotton trade.
Oh, yeah.
That comes to mind.
Yeah, Percy Thomas.
Who was that?
He was a cotton trader, really charismatic, persuasive guy,
Okay.
and he managed to lure our narrator into this disastrous trade.
What happened?
So Thomas presents this, like, really compelling case for why cotton prices would rise.
Okay.
Backed it up with, like, data. It seemed really solid.
And our narrator, he fell for it.
He got sucked in, yeah.
Even with his experience.
Even with his experience. And it cost him millions.
Oh, wow.
He even doubled down
on
on his position as the market moved against him. It's like classic confirmation bias.
Oh, yeah.
You know, you just seek out information that confirms what you already believe,
Right.
even if it's wrong.
Even if it's wrong, yeah. It's a good reminder that even the best traders, they can be swayed.
Absolutely.
Especially, I don't know, if it's coming from someone you trust, right, or someone you admire.
So it's like you gotta think critically.
Always.
Yeah, even the opinions of, like, these so-called experts.
Right.
You gotta do your own research.
So he learned a lot about manipulation.
He did.
From, like, watching others and experiencing it himself.
Yeah.
But how did he, like, approach manipulation himself?
Yeah.
Did he have any, like, ethical boundaries?
You know, he believed there was this fine line between, like, skillful trading
Right.
and outright deception.
Okay.
So he didn't shy away from, like, manipulating prices,
Okay.
but he claimed he never, like, misled the public
Right.
or spread, like, false rumors.
So he kind of had, like, a code of ethics.
He did.
Even in this, like, wild west of early trading.
Yeah.
That's interesting. I mean, it makes you wonder if there's such a thing as, like, ethical manipulation today.
Right. It's a tough question.
Yeah.
But it's clear that our narrator was very aware of how manipulation can be used,
Yeah.
for good or for bad, right?
He saw it as a tool.
And like any tool, you can use it responsibly or irresponsibly.
Exactly.
There's that story about the P products pool
Oh, yeah?
where he ends up giving bad advice to
Yeah.
a friend.
Yeah, because of a personal favor.
Oh.
Even though his analysis, like, suggested otherwise.
Wow.
It just shows how dangerous it can be to let, like, personal relationships
Right.
cloud your judgment, even for someone as skilled as our narrator.
Totally.
So it's really important to, like, maintain your objectivity.
Right.
Stick to your principles.
Even when it's hard.
Even when it's really tough, yeah.
So we've talked about, like, his manipulation strategies and stuff, but did he, like, over time develop a specific trading philosophy?
Yeah, I mean, I think
Yeah.
his philosophy really evolved over time.
Yeah.
You know, he didn't have, like, a fixed set of rules.
Okay.
It was more about constantly adapting, learning,
Right.
refining his understanding of the market.
So he was playing this high-stakes game, manipulating markets, making millions. But it wasn't all smooth sailing, was it?
No, not at all.
This guy, he was known for, like, taking huge risks.
He was
Did that always work out for him?
not always, but it definitely earned him a reputation.
Like what?
They called him the boy plunger in the press.
The boy plunger.
Yeah, pretty catchy, right?
I like it.
And that reputation, you know, as this, like, fearless trader,
Yeah.
it became a powerful tool for him.
How so?
It's like his reputation kind of preceded him,
Right.
you know, creating this aura of invincibility.
Almost like a self-fulfilling prophecy, you know?
Like we're out there.
People believed in him, so
Right.
it made it happen.
That's the power of perception in the market.
Totally.
There's this great anecdote about the consolidated stove deal.
Okay.
He used this reputation to his advantage.
Ow.
So he creates this buying frenzy,
Huh?
drives up the price of the stock, and then,
Mhm.
get this, he sells a huge block of shares
Yes.
without even owning them.
Wait, hold on. He sold stock he didn't even have.
Yeah, it's called short selling.
How does that even work?
So basically, he borrowed the shares, sold them at the inflated price,
Okay.
and then hoped to buy them back later at a lower price to cover his position.
Oh, so like he was betting the price would go down.
Exactly.
That's risky.
Very risky, yeah.
I mean, that takes a lot of confidence
It does.
to pull something like that off.
But, you know, his reputation really helped him manipulate the market.
Right, because people saw his name
Yeah.
and they just, like, jumped on board.
They get excited. They follow the leader.
Yeah, because they thought, well, he must know something.
It's like his name alone was enough to, like, create this buzz.
That's wild. But even with all his, like, skill and daring, there's a sense of, I don't know, caution in the later part of the book, right?
Yeah.
It's like he starts to see the limits
Totally.
of his own approach.
Yeah. As he gained more and more experience, he realized the market was getting more complex,
Okay.
harder to predict.
So it's not just about, like, reading the tape anymore.
It's not enough, no.
Yeah.
He warned about relying too much on, like, so-called insider tips.
Oh, yeah.
And emphasized doing your own independent analysis.
That's so relevant today, you know?
No.
With all the information out there.
It's overwhelming.
And everyone's like, oh, I got the inside scoop.
Right.
How do you even filter all that out?
Well, he learned the hard way that
Uh-huh.
those tips, they can be disastrous.
Really?
He talks about the New Haven Railroad, the Borneo tin manipulation,
Oh, yeah.
where seemingly good information
Right.
turned out to be totally false.
What
He
happened?
lost a lot of money.
That's rough.
It's a good reminder to always be skeptical,
Right.
verify your sources,
Trust no one.
pretty much.
Make your own judgments.
Exactly.
So basically, he realized that, like, no one,
Yeah.
not even him,
Mm.
can, like, consistently beat the market.
It's impossible.
Right. There's always going to be risk.
Always.
That's humbling, I think.
It is,
Mm.
yeah. It shows how much he matured as a trader.
Right.
He's not pretending to have all the answers anymore.
Right.
He's just sharing what he's learned,
Yeah.
the good and the bad.
So after going deep on this book,
Yeah.
what would you say is, like, the biggest takeaway for our listeners?
I think it's that understanding market psychology
Right.
is just as important
Yeah.
as the numbers.
Okay.
The market is driven by emotions,
Mm-hmm.
fear, greed,
Right.
hope, despair.
They're powerful.
And those emotions, they could be way more powerful than any, like, economic indicator
Right.
or chart pattern.
Yeah. It's a good reminder that we're all human, you know?
We are.
Even the best traders.
These are the best.
We make emotional decisions.
all the time.
So this book is, like, teaching us
Yeah.
to be aware of our biases,
Look at it.
control our impulses,
Yeah.
approach the market with, like, a healthy dose of, I don't know, skepticism and
Right.
humility.
Humility is huge.
Yeah, because it's not just about making money.
Right.
It's about understanding ourselves,
Yeah.
how we react to, like, risk and uncertainty.
And how we navigate a world
Yeah.
that's, like, constantly changing.
This book is, like, full of wisdom
Yeah.
that's just as relevant today.
Absolutely. It's timeless.
It's a classic for a reason. You
Yeah.
know, it's
Yeah.
not just like a trading manual.
No.
It's like a study of human nature,
Totally.
a story about risk, reward, the pursuit of mastery.
It's a great story.
And for our listeners out there,
Yeah.
here's something to think about.
Okay.
Knowing what you know now,
Mm-hmm.
would you have the nerve
Yeah.
to pull off a move like that consolidated stove deal?
Right.
Use your reputation to, like, influence the market.
That's a great question.
It makes you think, right?
It does.
About the power of perception.
Yeah.
The line between, like, skillful trading and manipulation.
And even for people who aren't, like, traders,
Mm.
this book, it offers, like, insights into decision-making,
Yeah.
understanding human behavior, just
Totally.
navigating a world of uncertainty.
So whether you're, you know, a seasoned investor or
Yeah.
just curious about finance,
Mm-hmm.
this book deserves a spot on your reading list.
Definitely.
Until next time, keep diving deep, keep learning, and keep challenging your assumptions.